So there's no doubt the housing market's confusing right now. So I'm going to break it down for you. Hi, I'm Nick with the Iannitti Realty Group coming at you with a real quick housing update for September. So getting started, let's talk about home sales. We know that they're down, right? Nationwide, basically down 16%. But when you break it down by region like this in the National Association of Realtors, every region is down double digits. We're going to talk about why. Okay, two factors are driving current sales activity. Obviously, inventory availability, or what I would say unavailability, and the mortgage rates. Unfortunately, both of these have been unfavorable to buyers, according to Lawrence Yunus, the chief economist at National Association of Realtors. I would also say these interest rates are kind of unfavorable to sellers as well, right? And that's part of the reason why we're in this issue right now with limited new listings. We're going to talk about this in a second, but if you're sitting on a 3% mortgage, are you incredibly motivated to go out and buy a new home at a 7% mortgage? Probably not, right? So inventory obviously continues to be the issue right now nationwide. We're at about 3%. Remember, I'm sorry, 3 months worth of inventory. Remember, we need 6 months of inventory for a healthy market. We haven't seen that basically since about 2007. And this is particularly why, right? Because basically what we've got going on since the last crash, this is historically how many homes we've built every year. For about the past 14 years, we have been, below that average number. So this white space right here, this is kind of the hole in the inventory that we're experiencing right now. The other thing to complicate this, I thought this was really interesting. This is new from the National Association of Realtors. Basically, if you look at before the last crash, right, from 1985 to 2009, the average tenure inside a home, people held a home for about 6 years. That's the number we've always used. I've always used that my entire career. But now we see from 2010 to now, it's really about 9.3 years, right? In other words, a 50% increase in how long people are actually staying in their home, which obviously doesn't help to add towards inventory. Okay, this is just graphically, basically how much we're short here, and we see this obviously in every category of listing. When you look at new listings, active listings, and total listings, they are down when compared to 2017, 18, 19. These are the last normal years, right? Not the unicorn years. We don't want to really compare it to the unicorn years because things kind of went crazy. We all know that. But basically, looking at the last three normal years we have on record, we're still well below where we need to be. Okay. This is basically realtor.com. While inventory continues to be in short supply, August witnessed an unusual uptick in new listings compared to July, right? Hopefully, they're thinking that's going to signal a return to seller activity. And what they're talking about is this right here. When you look at this kind of historically, and we can go much further back, but usually around May, after May, things start to taper off, right? When you look at this year, for the first time in a very long time, we actually saw listings go up in August. So that's huge. We'll see what happens if this trend can continue through the rest of this year. Okay. When we talk about the lending landscape, though, we're basically looking at mortgage rates. Keep in mind the 30-year fixed rate follows pretty closely to the 10-year Treasury bond, but also realize it typically follows inflation, right? You can look at here in mid 70s, inflation shot up, so did rates. When inflation came back down in the mid 80s, so did rates. Right now, we see a little bit of an inversion. We see inflation coming down, but rates are still high. So we're just going to have to wait and see. Hopefully, rates will follow that. I know what some of you are thinking. Everybody, all the talking heads keep telling us that inflation is coming down. But if you've been to the grocery store or to the gas station, you may not necessarily agree. And I don't disagree with you either. I thought this was also interesting from Forbes. This is their term, the Nepo home buyers. Throwback here to nepotism. Basically, 38% of recent home buyers under the age of 30 used a cash gift or some type of inheritance to help with their down payment. Okay, so basically, if you think about it, where did this family get this money from? Well, they probably got it from their home, right? So this is just kind of a little more proof that real estate absolutely does help to build generational wealth. But if you don't have some rich relatives, don't be despaired. There's a lot of down payment assistance programs out there for first-time buyers. There's also rental assistance programs out there that can help families pay a little less in rent so that they can save up for a down payment. You should absolutely ask your lender about these if you're a first-time home buyer. Okay. As far as home prices, I had this in previous months, right? This was basically a Fannie Mae study. They've been doing it back since 2010. 37% of people surveyed thought that prices would be coming down for the next 12 months. That's into this year, right? We know that has not happened. We also saw that at the beginning of this year, this number persisted, right? But now we're starting to see the number come down. Now people are reading, kind of the proof in the pudding. They're seeing that home prices are not coming down, although realize still 1 out of 4 people still thinks over the next 12 months home prices are going to come down. I don't think that's going to be the case because we're not going to solve that inventory situation anytime soon. And if we are able to get insurance mortgage rates to come down, that's definitely going to bring a lot more pent up buyers back into the market. But this is basically what we're looking at, right? Case Shiller, FHFA, CoreLogic, not just them, those Zillow, Black Knight, Freddie Mac, they've all shown a rebound in house pricing. Okay. When we talk about the home price expectation survey, remember that's a nationwide panel of over 100 economists, real estate experts, and investments and market strategists. This is what they're talking about as far as their home price expectations over the next few years. Don't get hung up on this 2024 right here. I think what you're seeing is this number I'll show you. Actually, if you look at it, they were at a -2%, right? And they revised it to 3.3. So this is the revised number. I just don't think they've gotten around to revising it for next year. Okay. But what we're looking at is some type of moderate price growth around 3%, which is exactly what we want to see. That's kind of where historic numbers really should be. Okay. As far as the powers that be that actually kind of give expectations on home pricing, you could see that all of them got it wrong this year, right? Because remember, we had a huge dip in the market last year, kind of a little bit of a correction when rates actually doubled for the first time ever in history in a single year. And there's actually a lot of big sways in here. So this will be interesting to see what actually happens. This is basically the 48-year average monthly price movement. So basically, this is how much typical appreciation you see by month. Okay. So in other words, this is a really good graphical representation of seasonality. When we compare this to our prices right now, look, we're already starting to blow out the 48. Well, I shouldn't say blow out. We're already above the 48-year average, which is good if you're a seller, right? But we realize that it's not a huge difference yet, which is good. We really want to see some moderate price growth. We don't want to see things appreciating at 15 to 18%. I know if you're a home seller, you love that. But again, that's just not sustainable. Okay. When we do talk about equity, though, I thought this was really interesting. This is FHFA, and basically 70.7% of mortgages out there are less than 4%. Look at this. 26% of all mortgages out there are below 3%, and almost 45% of them are within 3 or 4%. Okay, so this is a huge number. Realize this is basically what is stalling out listings coming back into the market, right? If you're in this category, you're probably not going to run out and buy a new house because you want a bigger kitchen. Okay. Now, that's not to say that you're not going to sell a house if you're in this category. This is another graphical representation, right? This is kind of joking a little bit. Less than 3% not selling, probably not selling. Keep in mind, though, if somebody's in this, sub 3% and they have their dream job finally comes through and it's in another state, odds are they're probably going to be selling. If they, are in a 1-bedroom townhome in a super urban area and now they're pregnant with triplets, okay, maybe, so this is not, set in stone, basically, but just realize, again, this is a huge section of the pie where these people are really going to have to think long and hard about moving. Okay. Mortgage rates, I thought this was interesting, are obviously less relevant to home owners, especially older ones. 26% of homeowners say it's not really a factor, and that's because 43% of them say that they won't need a mortgage. But this is what's interesting, right? 35% of baby boomers, okay, really not impacted by mortgage rates, but 23% of Gen X and 20% of Gen Z say the same thing. That's really interesting, in my opinion. But again, back to equity. Keep in mind, this is basically what you're looking at here is a window into home price stability. 38.7% of homes are owned free and clear with no mortgage. Okay. 30% of homes have more than 50% equity in there. Okay. So 68.7% of homes have at least 50% equity. That's huge. And then the next category down, almost 21% of people have 30 to 50% equity in there. Okay. This is why you're seeing pricing stability. Obviously, a lot of people don't want to leave their home with a low mortgage. The other thing, though, is nobody here is desperate to have to get out of their housing situation. And if they do, they've got a lot of excess funds to move into that next home. So that's definitely helping with price stability. So if you have questions about, what does this all mean? Is this a good time for you to buy and sell? just reach out. I'm more than happy to answer any questions you have. Also, keep an eye out. Of course, I'll be doing a deep dive market update for the San Diego and Sarasota housing markets. And that's it. Thanks so much for tuning in. And remember, who you choose to negotiate for you absolutely matters.